Let's start today's news. First news is about Paytm Buyback capital return to shareholders, says advisory firm, COSA's focused on building value. Paytm board has scheduled a meeting on December 13 to consider a proposal for share buyback, keeping in mind the company's liquidity position, which may be beneficial for its shareholders. Proxy advisory firm IIAS has said that 197 Communications share buyback plan is essentially a return of equity capital to its shareholders, as the company has been reporting cash losses every year, while the digital financial services firm said that it remains focused on building long-term value for stakeholders. Institutional Investor Advisory Services, IIAS, on Monday said buyback of shares at less than Paytm's IPO launch price of 2,150 rupees apiece will favor Paytm's pre-IPO shareholders. It said employees and IPO shareholders are unlikely to see the buyback positively, unless they entered the stock at a price lower than the to-be-announced buyback price. 197 Communications Limited, OCL, had listed itself at an initial public offering, IPO, price of 2,150 rupees, which was trading at around 75% lesser price of 538.20 rupees on the BSE on Tuesday. IIAS said buybacks are generally used as tax-efficient instruments to return excess cash to shareholders, and they signal that the company has strong cash flow generation, which is more than required to maintain the company's growth trajectory. In Paytm's case, the company continues to report cash losses annually. Therefore, the buyback is essentially a return of equity capital to its shareholders, IIAS said. Paytm board has scheduled a meeting on December 13 to consider a proposal for share buyback, keeping in mind the company's liquidity position, which may be beneficial for its shareholders. Paytm has a liquidity of 9,182 rupees crore, as per its last earnings report. Since inception, Paytm has been burning cash. We believe that the pre-IPO cash on the books is also likely to be from an equity raise from its pre-IPO investors. It is possible that this is the pool from which the board will attempt to demarcate its buyback pool, the proxy advisory firm said. Paytm said that its buyback proposal will fully comply with the statutory framework and regulations that govern the formulation of a share buyback plan, and the decision whether or not to approve it will be made by Paytm's board after a due diligence. We strongly disagree with the approach of speculating on the drivers and outline of a buyback without waiting for the outcome of a board decision. While tabling a proposal for a buyback, the company has ensured that there is surplus liquidity, which means that all cash requirements are adequately budgeted. The management is confident of strong operational performance and remains focused on building long-term value for its shareholders, a Paytm spokesperson said. The spokesperson added that the company cannot use IPO funds for any proposed buyback, as it is not allowed as per regulations. Paytm's plan for a buyback is driven by its strong financial performance and liquidity. It reiterates that IPO funds cannot be used for a buyback, and the company will be using its ample liquidity from pre-IPO if the buyback is approved by the board, Paytm said. Next news is about how SEBI can crack down on unregulated social media financial gurus. The regulator needs to act proactively to control dodgy stock market analysts and advisors who use social media to mislead investors. The urge to make gains without putting in much effort is widely prevalent in our society, and that has created an insatiable demand for miracles. Unscrupulous gurus and babas have flourished for this reason, as have the so-called financial gurus on social media who promise astronomical returns on investments of a few thousand rupees, and that too within a trading day. Let's call it miracle mongering in markets, a practice that cannot be totally stopped but can certainly be curbed by the Securities and Exchange Board of India, SEBI. SEBI was set up at a time the markets were ruled by deep paranoia of massive scandals and scams. Thus, it focused more on investor appeasement rather than investor empowerment. Why else would advertisements of financial security issuances get away with reading out the caveats and statutory warnings at a rapid speed? The demand for miracles in stock markets and the supply of tips have soared in recent years with the all-pervasive spread of social media and the decentralization of information. Fake Twitter profiles are offering free tips and promising mouthwater returns to trap naive investors into joining the Telegram channels of the so-called financial gurus. On Telegram, many such financial gurus run paid channels, on which they offer stock tips. This is largely an illegal operation because they aren't SEBI-registered research analysts who can suggest stock calls or investment advisors who are allowed to even create portfolios. They don't take the license because it places a lot of trading restrictions on them. To advertise their services, these financial gurus post a regular narrative of being self-made and of living the big life, with fancy cars and luxurious holidays. SEBI's action escalated panic among dodgy financial gurus. Also, SEBI had ordered an unregistered advisory called Fingravy Wealth Creation to reimburse fees it had received for advisory services, which amounted to nearly 6 rupees crore. The tens of thousands of unqualified, inexperienced, ineligible and therefore unregistered financial gurus have since deleted their online footprints. This single act of SEBI exercising its powers to investigate unregistered analysts and advisors proves that power is powerless unless exercised. SEBI should allocate resources to strictly enforce the rules it is empowered to frame. To curb the practice of using social media by unregistered analysts and advisories to dispense misleading and false trade tips and investment advice, SEBI needs to work on a two-pronged strategy of investor empowerment and enforcement of regulations. Next news is about Landmark Cars IPO subscribed 17% on day 1. 10 things to know. Landmark Cars IPO share allotment will be finalized by December 20th. Unsuccessful investors will get refunds in their bank accounts by December 21st and shares will be credited to the demat accounts of eligible investors by December 22nd. The initial public offering of automotive retailer Landmark Cars has subscribed 17% on its debut as it has received bids for 14.04 lakh shares against offer size of 80.41 lakh shares. Employees have bid 1.2 times the allotted quota, while retail investors have bought 17% shares of the portion set aside for them, and the reserved portion of high net worth individuals was subscribed 39%. Qualified institutional buyers have bought 1,624 shares of the reserved portion of 22.91 lakh shares. The maiden public issue of the premium and luxury car brands retailer has opened for subscription on December 13th. The offer will close on December 15th. This is the third public issue getting opened in December after Sula Vineyards and Aban's Holdings. The offer price band has been fixed at 481 rupees to 506 rupees per share. Landmark Cars launched the public issue of 552 rupees crore shares that comprises a fresh issuance of shares worth 150 rupees crore and an offer for sale of 402 rupees crore. TPG Growth 2 SFPTE Ltd is the biggest seller in the issue, offloading shares worth 325 rupees crore via offer for sale. Other selling shareholders are Asta, Sanjay Karsandas Thakur HUF, and Garima Mishra. Shares worth 1 rupee crore have been reserved for employees, who will get them at a discount of 48 rupees a share to the final issue price. The company will use the fresh issue money to repay debt, 120 rupees crore, and for general corporate purposes, while the offer for sale funds will go to selling shareholders. As of June 2022, the company had total borrowings of 464.36 rupees crore. Investors have to bid for at least 29 equity shares and in multiples of 29 thereafter. The minimum investment by retail investors hence would be 14,674 rupees and the maximum they can invest is Rs 197.62 for 13 lots, as they are allowed to invest up to 2 rupees lakh. Half of the offer has been reserved for qualified institutional buyers, 15% for high net worth individuals and the remaining 35% for retail investors. Landmark Cars claims to be a leading premium automotive retail business in India with dealerships for Mercedes-Benz, Honda, Jeep, Volkswagen and Renault. It also has a commercial vehicle dealership with Ashok Leyland. Landmark Cars reported a 494% growth in profit at 66.2 rupees crore for the year ended March FY22 from the previous fiscal, and revenue grew by 52% to 2,976.5 rupees crore in the same period, partly due to a low base in FY21 that was impacted by COVID-led lockdowns. Profit for the quarter ended June FY23 stood at 18.14 rupees crore on revenue of 800.3 rupees crore. Total promoters' shareholding in the company stood at 60.24% as per the RHP, and the rest 39.76% is held by public shareholders. Among public, investor TPG Growth has a 28.26% stake or 1.08 crore shares in the company. The share allotment finalization will be done by December 20th. Unsuccessful investors will get refunds in their bank accounts by December 21st, and the shares will be credited to the demat accounts of eligible investors by December 22nd. The company will make its grand on the BSE and NSE on December 23. Its IPO shares are trading at around 2 to 5% premium in the grey market, analysts said. Next news is about Sensex gains 402 points, Nifty above 18,600 on favorable inflation data. The BSE mid-cap and small-cap indices ended in the green. Underpinned by favorable domestic macro numbers and optimistic global cues, domestic indices belled the day in positive terrain. PSU banks led the rally while IT snapped its losing streak on bargain buying, said Vinod Nair, head of research at Geojit Financial. India's retail inflation eased sharply to 5.88%, which was within the Reserve Bank of India's tolerance band. However, the euphoria was partially offset by an unexpected decline in industrial production, which shrank 4% in October. The U.S. inflation figures, which are due before the Fed announcement, will provide an indication of the Fed's policy stance, he added. Next news is about top 5 gainer and top 5 losers. IndusInd Bank, Bajaj Finance, M&M, HCL Technologies and Infosys were among the top Nifty gainers, while losers included Apollo Hospitals, Hindalco Industries, BPCL, UPL and Nestle India. Among sectors, the Nifty PSU Bank Index rose nearly 4%, the Information Technology Index gained 1%, the Nifty Bank Index rose 0.5% and the Auto Index added 0.4%. The BSE mid-cap and small-cap indices ended in the green. On the BSE, the Information Technology Index added 1% and the Bank and Capital Goods indices added 0.4% each. However, the Realty Index shed nearly 1%. Among individual stocks, a volume spike of more than 400% was seen in Tata Communications, Multi-Commodity Exchange of India and Dr. Lal Pathlabs. A long build-up was seen in Tata Communications, Multi-Commodity Exchange of India, Polycab India, while a short build-up was seen in Dr. Lal Pathlabs, Loris Labs and Dalmia Bharat. More than 150 stocks touched their 52-week high on the BSE, including Walchandnagar Industries, Yes Bank, Union Bank of India, South Indian Bank, Ramkey Infrastructure, PSB Projects, NCC, Kalpataru Power Transmission, Indian Overseas Bank, DCB Bank, Bharat Forge and Axis Bank. Next news is about 10 stocks that moved the most on December 13. PSU Bank Index rose nearly 4%, IT Index was up 1%, while Realty Index was down nearly 1%. Tata Motors. The stock ended in the green on December 13. Tata Motors stated that it had approved the partial divestment of its equity shares in subsidiary Tata Technologies via an initial public offer, IPO. The automaker said it will increase prices of its commercial vehicle range by up to 2% from January to offset the impact of rising input costs. While the price increase will vary as per individual model and variant, it will be applicable across the entire range of commercial vehicles, the automaker said in a statement. NCC. The stock price jumped 5% on December 13. India Ratings and Research has upgraded the long-term rating of fund-based working capital and non-fund-based limits of NCC to LNDA+/stable/LNDA1 while short-term ratings were affirmed. The ratings on the term loans have been withdrawn as the company has paid the term loans in full. BGR Energy Systems. The scrip hit 20% upper circuit after the firm received orders worth 330 rupees crore from Indian Oil Corporation. The order includes construction of civil and structural works in Panipat refinery project complex. The contract completion period is 18 months. Godfrey Phillips. The share shed over 2% after Jupiter India Fund and Jupiter India Select SPV sold 0.06% stake in Godfrey Phillips India via open market transactions on December 8. With this, their stake in the company reduced from 7.22% to 7.16%. GR Infra Projects. The stock added 2% on December 13. GR Infra Projects entered into share purchase agreement with Lokesh Builders for transfer of entire shares being held by the company in its subsidiary GR Highways Investment Manager, GHAMPL. After the transfer, Gimpel would cease to be subsidiary of the company. The transaction cost is 15 rupees crore. Keck International. The scrip jumped over 4% after the company received orders worth 1,349 rupees crore across its various businesses. The transmission and distribution business has secured orders for T&D projects in India, SAARC, Middle East and Americas, while the business has bagged orders for building a data center and for infra works in the hydrocarbon segment in India, it said in an exchange filing. Bandhan Bank. The share price ended in the green on December 13. Bandhan Bank had obtained guarantee under CGFMU, Credit Guarantee Fund for Micro Units, the trust fund set up by Government of India, managed by NCGTC as a trustee, with the purpose of guaranteeing payment against default in loans extended to eligible borrowers by banks. It is to be informed that bank has received claim under the scheme for FY 2022-23 amounting to 916.61 rupees crore, Bandhan Bank said in its release. Vedanta. The stock ended in the green on December 13. Vedanta Group said that it has signed pacts with 30 Japanese technology companies to develop an Indian semiconductor and glass display manufacturing ecosystem, according to media reports. 197 Communications. The scrip ended in the green on December 13. The board of directors of 197 Communications will consider buyback of shares in its scheduled meeting today. In its latest communication with Indian bourses, the firm informed about the developments in regard to buyback of shares, citing it would benefit the existing Paytm shareholders. Macrotech developers. The scrip was down over 5% after the firm achieved its minimum public shareholding requirements post the closure of its qualified institutional placement (QIP) issue. The company managed to raise 3,547 rupees crore through the QIP issue, it said in the exchange filing. Price for the QIP has been fixed at 1,026 rupees per share, a slight premium compared to the floor price of 1,022 rupees. Next news is about Nifty. Nifty may march towards 18,700 volatility index at 16-month low. The bank Nifty hits a fresh all-time high of 43,984 during the day. It closed at 43,946, 238 points higher than the previous day. The Nifty got back above the crucial 18,500 mark to close 0.6% higher on December 13, as retail inflation falling to an 11-month low raised hopes of a slower pace of rate hike. A rally in the global market also helped Indian shares. The index opened higher at 18,524 but corrected to 18,490 and then immediately rebounded in initial hours to move higher for the rest of the session. It hit the day's high of 18,617 and rallied 111 points to close at 18,608. The Nifty closed above the 20-day simple moving average, 18,514, and formed a bullish candle on the daily charts, making higher highs, higher lows. It also broke out of the small downward sloping resistance trend line adjoining December 1 and December 9. Hence, the uptrend is likely to continue in the coming days, with the next resistance at 18,700 and then the record high of 18,888, with support at 18,500 and 18,400, experts said. Technically, the market not only reclaimed the 20-day SMA level but also closed above the same, which is broadly positive. The bullish candle on daily charts and promising reversal formation is indicating the continuation of an uptrend wave in the near future, Shrikant Chauhan, head of equity research, retail, Kotak Securities, said. Chauhan said the uptrend texture is likely to continue in the near future and 18,700 to 18,725 would be the next resistance zone. A fresh sell-off is possible if the index slips below 18,450, the market expert said. The options data indicated that the Nifty may trade in the 18,400 to 18,750 range in the coming sessions. The maximum call open interest was at 19,000 strike followed by 20,000 strike, with call writing at 18,900 strike then 18,950 strike. The maximum put open interest was at 18,000 strike followed by 18,500 strike, with put writing at 18,400 strike then 18,500 strike. The volatility index India VIX was down by 3.26% from 13.31 to 12.88, its lowest closing level since August 2021, making the ground more comfortable for bulls. The Bank Nifty opened 85 points higher at 43,794 and registered a fresh all-time high of 43,984. It closed 238 points higher at 43,946. The banking index formed a bullish candle on the daily frame and made higher lows for the fourth session. It has to hold above 43,750 to make a move towards 44,250 and 44,444, with supports at 43,750 and 43,500, Chandan Taparia, Vice President Analyst Derivatives at Motilal Oswal Financial Services said.